After over 20 years as a realtor, here are 5 things that I would never do when buying my own home. Now, these aren't just generic tips. These are hard-won lessons that my clients and myself have learned the hard way that I've seen over the last 20 years. And I have a bonus for you as the last one that I think is actually the most important one right now in 2025. So stick around for that. Let's get stuck right into 5 things I would never do. The first thing I would never do is waive the inspections. Now, this might sound like a no-brainer, but actually it happens a lot of the time. In fact, during the 2020 and 2021 insane sellers real estate market, people were waiving inspections a lot of the time. And when you do this, you rob yourself of the opportunity to find out what's going on with the home. Now, our big tens of thousands of dollars sleeping dragon problems rare? They are rare. I haven't seen a ton of them over the years, but you don't want to be the one who catches one and has to spend that money because you cheaped out on a couple of $100 inspections. I'm going to share with you 2 stories today of people who cheaped out on inspections, one of them being this guy right here and the ways it bit them in the backside. The first one, though, is one of my early clients buying down in the Arden area of Sacramento. Now, in the older neighborhoods of Sacramento, they had a sewer pipe material called Orangeburg. I won't go into a sewer lesson today, but suffice it to say, over 30, 40 years, that Orangeburg pipe turns into paper, tree roots get all inside, and it really gums up the works. Now, this is 20 years ago, maybe 18 years ago. And so a sewer inspection now is maybe $250. Back then it was like $125. And they didn't want to do it. They were a young couple. They were on a tight budget, baby on the way, and they didn't listen to me and they didn't do the sewer inspection. Well, come a couple months into owning the house and they had sewage backing up into their tub, the place where they want to bathe their new baby. Not a great situation. They started digging into the problem, and it was one of these old 50s bathrooms with carpeting in it. When they pulled up the carpet, they found not only was the sewer lateral pipe absolutely demolished and riddled with tree roots, the roots had come all the way up through the wax ring of the toilet and out under the carpet and had filtered out and were soaking up things there out of the underside of the carpet. It was disgusting, and it was a big problem. Back then, this was probably a $3,500 to $5,000 fix. Now it would be $8 to $10,000 to fix something like that, all of which could have been avoided by just a $125 inspection. Inspections are cheap insurance. Learn from my past clients' mistakes. Now, this guy right here made the same mistake. I've mentioned on the channel before that the first house I attempted to buy was going to be a really great investment. It was the ugliest home in a neighborhood of very expensive homes, and I could have made a lot of money on that house. But in the middle of that transaction, someone died in the home. I'd already done a full suite of inspections, but it turned out that guy who died in the house wasn't really the owner. The owner was in prison and sent a bunch of her crazy meth head friends over to loot everything out of the house. Stoves, HVAC systems, stained glass windows, all of it started to get looted, and it just got to be too much, and we bailed out of the transaction. Now we went to buy another house, but I'd already spent all the money on that first house. I was new in the business at the time. I was very young, and we didn't have a lot of extra cash on hand. I'd worked construction for years, felt like, you know what, I can evaluate a house pretty good. Myself and my father-in-law went through it, thought it was fine, and moved on with the purchase, saving myself a few $100s. Back then, a home inspection was maybe $350. Today, it's more like $500-600. So I saved myself $350. Well, there was all sorts of things that my father-in-law and I missed that I ended up having to pay for and fix over time. Now, I held that home for a very long time. So in the grand scheme of things, it wasn't that big of a deal, but it sure would have been nice to know up front, and I could have negotiated for the seller to pay off a few of those things for me or give me a credit for them had I taken the time and the little bit of money to just redo those inspections, even though I had lost out on the inspection money on that first property. So I'm not immune to making mistakes myself. This is one I've made. This is one my clients have made. If you get lucky, it just costs you a longer honey-do list of things to fix in your home. If you get unlucky, you can find a $10,000 to $20,000 sleeping dragon, or you might find something unsolvable. Once in my career, we found a 3,000-gallon spring-fed cistern in the basement of a home. They built the home around it. There's no way to stop this. The water's coming out of the earth. You're not stopping that force ever, and it made the basement very moist and wet and kind of caused mold problems and all sorts of other things going on down there. And it was actually, and this is the only time I can say this in 21 years now in real estate, it was an unsolvable problem. Nothing you can do about that one. So sometimes things come up that are either unsolvable or just something you don't want to solve, something you wouldn't be willing to accept, and there's no way of knowing unless you do the inspections. Hands down, Buying houses, whether I'm buying a rental house, buying a new single family home, for me, representing a client, one of you off of YouTube, or representing my brothers or my family, never cheap out on inspections. Do them all. It's cheap insurance. If you're getting anything at all out of this video, hit the like button, click subscribe, and hit that little bell icon so you don't miss another video with crucial information to help you with your real estate decisions. Now, back to my list of 5 things that I would never do when buying my own home. All right, the second thing that I would never do when buying my own home is fall in love with the house while ignoring the neighborhood. Look, it's a trite cliche that the most important thing in real estate, or the most important top 3 things, are location, location, location. And everybody's so tired of hearing it, I think they tune it out. And they're starting to forget that this really is tried and true advice. I've had many clients over the years not be able to afford what they want in the neighborhood they want to live in, or in the school district they wanted for their kids, and they convince themselves to compromise or sacrifice and move into a neighborhood that's not as nice, or that's too far away from their work, or that's not in the school districts they want for their kids, and their kids aren't quite school age yet, so it's easy to convince yourself that that's an okay move to make, only to circle back to me, ask me to sell the house and help them move into another neighborhood, the neighborhood they wanted in the first place, a few years down the road. Now, financially, if you have to do it, you have to do it. But if there's any way to avoid this mistake, you want to avoid it, because the cost of selling a home and buying a home are significant. That's a lot of money. The cost of 2 transactions is double the cost of 1 transaction. And so if you're going to end up in that neighborhood anyway, sometime down the road, don't cost yourself double the money to do it. Also, you don't know what your life will be like, or the real estate market or the world will be like, when you're forced to make that change. Say you buy the house in the neighborhood that's not in the school district you want, and then your kid comes of school age, they start going to the schools in the neighborhood you chose, and it's not working out, and you decide, you know what, we got to move, we want to get them into that better school district, but now the market shifted, and your house isn't worth as much as it was when you bought it for, and you have to lose money on that house and go buy another one. Right? Or what if you have lost your job temporarily and so you can't qualify for a loan? Or what if you went from being a W-2 employee to being self-employed, took a chance on yourself, started your own business, which is awesome. Hats off to you. But you've only been doing it for 5 or 6 months. So the bank's like, no, you don't have enough income history for us to trust that you're going to keep making money moving forward and be able to make this loan payment. So now you don't qualify for a loan. What if you're a fixed income couple who weren't retired when they bought the house, now they've retired and realized the neighborhood's not what they want, they want to move, and now they don't have the income that they need to qualify for a loan to buy the new house. Life changes, the world changes, and there's no guarantee you'll be able to get out of the house you get into when the time comes or when you need to. So it's best to make the right decision up front. Because you know what you can always do? If you buy a house that's not quite to your liking in a really awesome neighborhood, you can always chip away at that over time. You don't need a loan to do remodels on the house. You can do what you can do with the money you have when you have it. There are no banks, no lenders, no gatekeepers to fixing your house up, but there are to buying a new one for most people who can't buy in all cash. And that's why it's so important to take location into consideration up front. Make it your number 1 priority, and don't allow a beautiful home in a less desirable neighborhood to lure you in like a siren and help you make bad decisions. I've seen this time and time and time again, and it almost always results in someone having to sell that house and buy another one and eat all of those additional fees. I don't want that for you. I wouldn't do it myself. No matter what, I will buy the nicest house I can afford in a neighborhood I want to live in, and no nicer. That's it. If I can't afford exactly what I want in that neighborhood, I will make some compromises to be in a better neighborhood for my family all day, every day. Don't forget location. If you made it this far, you're probably wondering who I am and why you should be listening to me about real estate or anything at all, really, and that's a pretty fair question. My name's Rich Curtis, and I'm with eXp Realty, and I've been selling homes here in the foothills in Northern California for over 20 years now, in markets ranging from the Great Recession to the COVID market insanity and everything in between. And in those 21 years I've been doing this, I have seen people make a lot of mistakes. So when it comes to real estate and mistakes that buyers make, I've got you covered. So let's jump right back into my list of 5 things I would never do when buying my own home, especially in 2025. And don't forget to stick around for that last one, which is the most important one for this year especially. All right, the third thing I would never do is overextend my budget or bet on future income to make up the gap that I feel I'm gonna have in being able to make my mortgage payment. Now look, back in the day, your parents would tell you things like, It's always going to feel uncomfortable when you buy a house. It's always going to be expensive, and the budget's going to be tight for a while, but buy the biggest, most expensive house you can afford, suck it up and make it work, and eventually your finances will fall in line. You most often get a raise at work. You find ways to trim here and there, and you'll make it work. And I think in a lot of our history, that was pretty sound advice, actually. I'm not faulting those people for that. I don't think that's sound advice anymore. We're living in turbulent times. Our stock market is all over the place. Our economy is all over the place. It's showing signs of cracking, frankly. We just had jobs numbers come in that showed that actually we added 1 million less jobs than they had told us we had by March of this year. We are seeing inflation being persistent, and we are seeing the Federal Reserve look at doing a rate cut probably this week as I record this video, which, although a rate cut sounds good and may provide a little bit of mortgage interest rate relief, it's a bad sign for our economy. In times like these, it's best to have an emergency fund and to have a lot of reserve in your budget to handle what may come. A lot of people are facing down unemployment, and right now we have more people looking for jobs than we have jobs to give them in the economy due to the recent trade war and tariff things that have been going on. And so it's a scary time for people employment wise. It is not the time to be maxing out your budget and be having to scrape every penny together every month to make this mortgage payment in the hopes that you will make more money down the road or find a way to make it work. This is a bad choice, and I've seen many friends, family, and clients overextend themselves and have to live a really house-poor, tight budget life because they made this decision. Pick a home that you can afford at a payment that you can make reasonably comfortably. That doesn't mean it won't be scary. Of course it's scary. That doesn't mean it won't feel a little tight the first couple months. Yeah, it probably will, but you know your finances. Make sure this is something you can really afford, and don't push it that extra $100, $200, $300, $400 a month because you saw a prettier home that you would rather have. Make some compromises. Keep a little room in the budget for emergencies because you don't know what's coming. These are not the times to overextend yourself and buy more house than you can afford. I see this one happen all the time. Realtors are complicit in this. I did a recent video about 5 red flags you're working with the wrong realtor, and one of them is your realtor trying to push your budget. If they're doing that, that's a bad sign. Throw them away, kick them to the curb, get somebody better who's looking out for you, and don't do it to yourself either. And to be frank, in the 21 years I've been doing this, it's more often that my clients push their own budget than they had worked with somebody else who pushed their budget. I don't ever push budget as a business rule, but my clients do it to themselves all the time, and I try my best to get them to stop. And I'm telling you right now, keep it within your payment comfort, especially in 2025. And speaking of overextending, I've got a bonus thing that I would never ever do when buying my own home, especially in 2025, coming up after number 5 that I think is the most important one for you to pay attention to in 2025, as it can get you in a financial trap that can be really painful to get out of and that can last for years. So stick around for that. All right, the 4th thing that I would never ever do when buying my own home is buying my home for my needs today without thinking about my needs tomorrow. Now let me explain. I've personally made this mistake. You might be younger. You might even think you're not planning on having kids ever. And so you buy a house that really doesn't work well for a family floor plan. Or you might not think you're ever going to have an adult family member whose health is ailing that you need to move in with you. And you're buying a floor plan that really wouldn't work or be flexible for that. The home I bought first, I bought when we were very young. And at the time, we were living a pretty great life. We were rafting all the time, rock climbing all the time, kayaking, skiing, traveling. We were having a blast, and we didn't have kids. And we thought, you know what? We're probably never, ever gonna have kids. So we bought a home that worked great for us, but is actually a really terrible floor plan for kids. It doesn't have good bedroom layouts. It has bedrooms on multiple floors all over the place where the kids don't feel comfortable sleeping on different floors, or where when they're babies, it's really annoying to have to run up or downstairs to a nursery or things like that. Now, none of our kids were oopses. We planned them. We just changed our mind. Life has a way of doing that. We decided eventually, you know what, we really did want to start a family, but we started it in that house that didn't work for kids. And as they grew, we started busting at the seams and were forced to have to abandon that house and go get another one that works for our family. And that's expensive, especially because we bought this house when we were very young and we had a very cheap mortgage payment. You couldn't even rent an apartment for what our mortgage was. It was a pretty great deal and an exceptionally low pandemic era interest rate on that thing as well. But when it has to go, it has to go. When your family doesn't fit, they just don't fit. And when we were doing our original search, had we just thought a little more and thought, we're really young now. What if we change our mind? What if we do want to have kids? Maybe we want to pick a floor plan that's just a little bit better. Or we're part of the sandwich generation. We're going to have ailing parents that need to move in with us and be helped along the way at some point. Is this house going to work for that? Well, having stairs all over the place isn't great for that either. So this is a mistake I personally made that cost me a bunch of money, having to upgrade to a bigger, better home in a later market when that home was more expensive and interest rates were higher. So I want you to avoid the mistakes I've made in my life and that many of my clients have made. Take a minute and sit back and think, you know what? Life is a long time. What if our life changes? What would this house be like with kids? What would this house be like with kids and an in-law living with us? What would this life be like if this house be like if one of us got injured and had different mobility issues? Would we still be able to live in this house? Would it still work? Think it through a little bit and try to get a home that has the most flexibility for you as possible. You make the most money on a home the longer you hold it for, and your mortgage payment gets better and better the longer you hold the home. After a lot of years, you can refi and bring that payment down if you needed to as you're approaching later life or fixed income time periods. So there's a lot of benefit in holding homes for a very long time, but you can't hold the wrong home for a very long time. So I encourage you to be a little bit more choosy, think a little bit deeper about how this home might age with you before you jump in, and don't make the same mistake that I did. If at the end of this video you still aren't sure about buying a house and you're a little bit nervous and you're worried about how to begin or where to get started, you're feeling overwhelmed, feel free to reach out to me via the contact information on your screen or in the description down below. Like I said, I've been doing this 20 years. I've helped hundreds of families just like yours achieve their dream of home ownership, and I'm always happy to help. And if you're not ready today, that's not a big deal. One quick conversation with me can teach you the things you need to do to get on the path to be ready someday in the future, and I'm always happy to put people on the road to future home ownership, so feel free to reach out. All right, the fifth thing I would never ever do when buying my own home is hire the wrong realtor. Now, look, I am a realtor, so if I'm buying in my town, then I would use myself. But I don't always buy just in my own town. I buy out of town, and I help family out of town and that sort of thing. And picking the right realtor makes an incredible difference. Now, all of you have a cousin, or a friend or a friend's husband who's in the real estate business. Whatever town you live in, if you throw a rock, you'll hit 5 or 10 realtors, guaranteed. But here's the challenge. 84% of realtors will be out of business within the first 5 years. Now, the statistic bounces around year over year, but I've never seen it be less than 83%, and I've seen it be as high as 90%. That is a massive attrition rate. That means that 84% right now of the realtors who are in the business for less than 5 years won't be in the business after 5 years. Think of the worst industry you can think of, restaurant industry. Restaurants have a 75% failure rate in the first 5 years. It is harder to become a successful realtor than it is to become a successful restaurateur. Let that settle in for a minute. So, if you're working with someone who's been in the business for less than 5 years, one, it is unlikely they're going to continue to be in the business or be an ongoing resource for you. Two, they have not seen all the problems, the things I've been describing in this video, all the horror stories. They haven't lived that life yet. They haven't had that experience, so they can't help you look out for those things, get ahead of them, and avoid those pitfalls. They just don't have the skills. So the number one thing that I look for whenever I'm involved in a real estate purchase is I hire someone who's been in the business for at least 10 years or more. Period. That is the opening table stakes. If they've not been in the business for 10 years or more, I'm not even going to interview them for the job of being my agent or my family's agent, or frankly, even your agent. We get a ton of reach outs every day from people like you who watch the channel who aren't buying in our primary market, Sacramento County, El Dorado County, Amador County, Nevada County, and Placer County. If you're outside those counties, I can't help you, but I have contacts all over the country, and I don't choose anyone for any of my people that I refer out that's been in the business for less than 10 years. This makes a massive difference. This can save you tens of thousands of dollars and making huge mistakes by having professional representation with the skills to get things done for you. Now look, it's really important whenever you're choosing someone to handle the largest financial transaction of your life that they have a qualification that goes beyond being your cousin or being the agent that was sitting at the desk when you first went into an open house. Here's a little insider baseball for you about real estate. Veteran realtors like myself have been doing this 20 plus years. We don't do open houses because they don't work. Open houses sell houses less than 2% of the time nationally. The only reason to do an open house is to get a bunch of interested buyers sign up on a list so you can pester them with marketing and try to sign them up as your buyers, i.e. the person sitting in that house is doing it not to sell that house, they're doing it to get more clients. When you hire me to sell your house, there are much more productive things I should be in the office doing to actively market your home, not sitting passively in an open house trying to get more clients. So the agents sitting in those open houses, they often aren't even the listing agents. Check the name of the agent, check the name on the sign. You'll find out most of the time they don't match. These are younger agents sitting in those open houses trying to scrape up buyers to work with. They're agents who've built their whole career on that. That's great. But if your qualification for choosing your agent is they were the one that was sitting at the open house, you're probably guaranteed that you're getting someone without the experience you need to get it done. And here's another shocking statistic for you. Not only are 84% of realtors out of the business in the first 5 years, but just a little over 80% of you buyers, you choose the realtor that you're going to work with to buy your home because it's the first one that you talk to. That's the real statistics. That's why these realtors clamor to be in the open houses. That's why they clamor to be the first one in front of you, because they know that's the most important criteria you're going to use in deciding which agent to work with. I'm telling you, be a little more picky. Use better criteria. Bare minimum, someone who's been in the business 10 years or more. Now, what if you're in a sticky situation where it's your brother who's got the real estate license, or it's your cousin, or it's your best friend's wife or best friend's husband? Here's a way that you can still honor that person and not have to subject your biggest financial transaction of your life to their lack of skill at the moment. And that is pick a better agent and have them give a referral fee back to your family. They can share 25% of their commission back to your family member. Most agents will be happy to do this for you. You get the more experienced agent. Your friend in the business gets a little bit of money for their troubles. They get to stay involved in the transaction, give you advice, watch, listen, learn, and be a part of the whole thing. But you have high level, highly skilled representation helping you. That's what I look for. I would never work with anybody in the business less than 10 years. All right, like I've said a million times on this channel, my goal with the channel is to help you make the highest quality real estate decisions you can from the comfort of your couch. So to that end, I like to over deliver, and I'm gonna give you a bonus thing I would never ever do. And I think this is the most important one in 2025. And that is, I would never buy too much house right now, planning on an interest rate drop in the future, saving me. So there is a lot of push in my industry, and it's petered out a little bit now, but especially starting in 2022 when the rates shifted, with a bunch of agents and lenders saying stupid, snappy aphorisms like, marry the house, date the rate. I mean, you just buy it now at this super high interest rate and you'll be able to refinance down the road. Don't worry about it. In a lot of markets, and historically over the last 15 years or so, that has actually been true and worked out, but it really has not worked out over the last 3 to 5 years for people. And anybody who bought a house in 2022 hasn't really been able to refi that house by now. The rates aren't appreciably lower. They are lower, but not low enough to where I would really be hitting the refi button yet. So if you had believed those people, if you had taken that advice back then, you'd still be sitting here right now struggling under those same mortgage payments, and that's not a good place to be. This is a mistake that can affect you for years. Now, I hammer home on this channel that you should meet our 5 real estate fundamentals. You should have an emergency fund. You should have stable, recession-proof employment. You should have good credit. You should have your down payment monies saved up, and you should have a long purchasing time horizon to protect your investment from fluctuating markets. And if you meet those 5 fundamentals, you're safe to really buy in almost any market. And one of those 5 fundamentals is you can make the payment no matter what. This payment at this interest rate that you're taking on right now, would you like it to be better? Sure. Would we all like it to be lower? Sure. If the interest rates get better, would I refi and lower it? Absolutely. But if they never get better, I can pay this payment no matter what at my current income, and it's not going to be a financial stress for my family. That's the most important one of the 5 fundamentals. And that's the most important one of the 6 things I've now told you I would never do when buying my own home for 2025 here. Do not buy at these interest rates and strap yourself with a payment hoping that the interest rates are going to come down. Do I think interest rates are coming down? I actually do. I think there's about a nearly 100% likelihood that the Fed is going to reduce the federal funds rate in the next 3 days after recording this video. It will have happened actually before I release this video. I believe they will reduce the federal funds rate. That's already been baked into the mortgage interest rate market, so we won't see much movement unless they go for a 0.5 point reduction instead of a 1/4 point reduction. Do I think they're going to reduce at the next meeting? I think there's a really good chance. So do I think we'll see mortgage interest rates improve here by the end of the year? Yes, I think we will. We're finally around that 6.5. Again, I can't quote interest rates. Depends on your credit and income situation and all of that. But, we're in the, just below to just above 6.5 range right now on interest rates. Do I think we could see 6.25 by the end of the year? Yes. Do I think we might even, on like an FHA where you get a 1/4 point haircut on the rate there, bop into the high fives maybe by the end of the year? Yes. So I think they are coming down, but there's no guarantees. And the economy is so crazy and the world is so crazy, things could flip-flop and shift back the other way. And of course, eventually, the rates will get low enough that enough buyers will jump off the fence that will again be back to low inventories and competitive market prices will go up. And then you've got other problems to deal with. You can't guarantee that your rates are going to be lower in the future. So whenever you pull the trigger on buying your home, make sure you can afford that payment no matter what. And if it goes down in the future, great bonus for you. But don't be banking on it and don't work with anybody that's encouraging you to make poor financial decisions and stretch yourself thin in the hopes that your ship will come in and the rates will come down to a point where it makes your payment better for you. Don't work with people encouraging you to make decisions like that. And don't be the person making yourself make decisions like that. All right, that wraps up our discussion of the 5, actually 6, with the bonus things I would never do when buying my own home, especially in 2025. And I hope this gives you some guardrails, some financial guardrails for you to put up around your home buying process to help you make good choices and stay out of the bad choices that could cost you tens of thousands of dollars down the road. That's what we try to do on this channel, is help you frame your thinking around your home purchase so you can make great choices. Now, if you want to figure out what's going on in the market right now, you can click this video about the market having shifted and whether it's time for you buyers to jump off the fence or not. You can click this other video here that goes through a general overview of should you buy in 2025 or not. And you can click this playlist down here for our Informed Home Buyer podcast, which goes over all the things about buying a home that you need to know to keep yourself safe, make good choices, and help you decide when is the right time for you and your family. As always, thank you for watching. Thank you for making it to the end with me, and I'll see you on the next one.